when there's a ton of potential in a new technology, the natural adaptable function of capital markets is let's put as much capital there as efficiently as possible. Let's find the boundaries. Let's find what works. Let's find what doesn't work. It's also historically true with financial structure innovations. You saw this with investment trusts, mortgage trusts, leverage buyouts. There's a number of examples in history where you actually have these financial structures that trade at a premium to the underlying asset, and they use that premium to acquire more and more of those assets. Those structures have generally produced bubbles that generally eventually pop. However, they also created financial infrastructure that we still use today. Much of private equity is rooted in what came from the leveraged buyout era. REITs came from the mortgage trust era. And in investment, the tools that were invented in the 1920s are so many of the tools that we're using today, of equity sales, of preferred shares, of all these different things. So I like to think of these as a similar analogy to what happens with technology also happens with new financial structures. There probably will be a ton of companies that come to market. There'll be a huge number of them. But eventually, you'll need to differentiate yourself. You'll need to have why this instead of that. Do we really need 100 of these things? Maybe we only need 5 or 20 or who knows.
Welcome back to Bitcoin Season 2. I have the man who praises the sun, the paper Bitcoin Chad meme himself, VP of Investor Relations at Nakamoto, Stephen Lubka. Welcome to Bitcoin Season 2, Stephen.
I'm excited to be here, man. It's we're recording this, I think, a day before the merger, so an exciting week, but very pumped to chat with you. And we've been talking about this one since I joined Nakamoto, so happy to finally record it.
Yeah, this is being recorded on Monday, August 11th. So as we know, things happen every day. You guys may be announcing some stuff later, but so this is prior to those announcements. But we have this meme, Paper Bitcoin Summer, which is really fun. You've owned it, but it's a little bit of a misnomer. Stephen, What is Paper Bitcoin Summer, and how do you own this meme?
Yeah, so me and the Bugle Boys, the Bitcoin Bugle, made this meme, and also shout out to Rob Hamilton. But so this was something we kind of concocted as we saw this trend of Treasury companies coming to the market, and it was acknowledging how impactful these were going to be, how much of a market impact they were going to have. We saw that early, and this is before I joined Nakamoto. And a lot of people were criticizing it, and they were calling it paper Bitcoin, which, if you understand the history, so it comes from paper gold. And so it referred to effectively depository slips of gold, which were supposed to be redeemable in full and turned out not to be. This is the original definition. There was some linguistic drift when the ETFs and futures came out, but that's the original definition. And so it signifies a fully backed instrument that should be redeemable, but is not redeemable because the issuer has issued more slips than they have collateral. So Treasury companies are like de facto not that. They can't be that because they are equity, and equity is non-redeemable. So part of it is kind of poking fun at, maybe the category mistake that people like calling every security paper Bitcoin because it isn't cold storage Bitcoin is kind of misunderstanding what really paper Bitcoin would mean. But it was one of these scenarios where I think you kind of take the insult and you run with it. I think it's just something you can do. And just like, you want to accuse us of selling paper Bitcoin? Yeah, we're the paper Bitcoin company. Come get some paper Bitcoin. Then I think there was just some creative experimentation and direction. And I think the 80s are coming back. I think vibes are high. And so we kind of started working off this 80s Wall Street, aesthetic that's been a lot of fun. But, it's like these companies, Treasury companies, have captured so much attention since, and I think they're going to continue to be. And so I think paper Bitcoin summer continues. It's kind of like eternal September in the .com a little bit. It's not about the summer. It's a state of mind. Paper Bitcoin summer. It'll be paper Bitcoin summer in December.
Yeah, it's always going to be paper Bitcoin summer. And, there is kind of a before and after. You know, I think back to like Pierre Rochard's Speculative Attack,
Sure.
which was written over a decade ago now. And this feels like, you know, the evolution of what comes out of that. But I heard, you know, I want you to give me the actual case, you know, set aside the memes. Like, what's the actual case here? I've heard you use this concept of like leverage, like using Bitcoin securities to like efficiently acquire Bitcoin. What's the case? Why do I want to own one of these as an investor?
Yeah, absolutely. No, and you know, Pierre and Bitstein, they predicted this a long time ago. I actually talked with Bitstein at the BPI summit. We talked for a while on the speculative attack paper and Treasury companies, and I won't. I think he's had enough tweets. It's fair that I say this, but he was like, "Yeah, this is what the paper was about." You know what I mean? So it is. The speculative attack paper was not about a bunch of middle-class people going to Bank of America and getting a 10% personal line of credit at 11% interest. I mean, go ahead and do that if you want to do that. I'm not in any way shaming or putting those people down. But that's not what it is. It is about a scaled financial move that uses capital markets to maximum effect. Like, it just definitionally is performed by speculators. It is a different thing. And so, yeah, they intuited or understood that if you have a money like Bitcoin and you have a system like fiat, that eventually this opportunity or this arbitrage opens up. So anyways, but to answer your question, why do these companies exist? I'm not even telling people, I'm not even saying you should buy it, you shouldn't buy it, but I just want to explain here's the value proposition. So I think the simplest way to understand, so there's kind of a way to understand it, and then it's kind of like the metric or the reason why. And so the metric or the reason why is that these companies are able to deliver per share Bitcoin growth. So if you own one share, over time, you have more Bitcoin per share. There's a growth rate. And as with anything in finance, we pay for the future value of an asset. You don't just pay for the net present value, you pay for the future value. So anything which is growing gets a multiple in finance. If you have a problem with that, take it up with Wall Street. But this is how financial markets work. And so why are they able? And so then to your original question, why are they able to deliver a growth rate? The reason is because they have a more efficient cost of capital than an individual. And so the reason they have that is effectively a form of regulatory arbitrage. That doesn't mean that's not me saying it's about bending regulation or manipulating regulation. It's just saying that due to financial regulation, only publicly traded companies can sell equity in public markets, can issue preferreds in public markets, can get, maybe not only them, but they have a much easier time getting non-callable long-term debt, right? If I as an individual or you as an individual tried to get a 10-year bond against our earnings or our assets or whatever at 6% interest, it would be impossible. You wouldn't be able to do it. And so these companies are able to use the kind of combination of tooling that is available to public companies to effectively buy Bitcoin with a lower cost of capital. A really simple example of this. Imagine that imagine MicroStrategy has $100 million in the bank. And scenario one, they buy $100 million of Bitcoin. Great. Their cost of capital was kind of like 1 for 1, whatever you want to call it. Now, assume they're trading at a 2x MNAV and they sell $100 million of equity to buy $100 million of Bitcoin. Because of the premium, their cost of capital is about half as much. They're able to sell $2 of equity for every $1 of Bitcoin. And it's cheaper for them to sell equity than it is to spend dollars. And you can do a similar thing with the preferreds. Their cost of capital on the preferreds is basically 10% or 9%, depending on which one you're looking at. And so it's, again, they're able to purchase Bitcoin more efficiently with a lower cost of capital. And as such, they're able to drive a greater return. So it is just saying that the financial tools that are available are very different for a public company. These are acquisition vehicles, and they are acquisition vehicles that function more efficiently than just a cash buyer.
So I could imagine, like, I understand this thesis. If I'm an investor, especially, using the crazy wide world of arcane financial tricks that we can do. Like, I'm an investor. I want to deploy a bunch of money into Bitcoin. Now I'm looking at it and I'm considering different ways we could do this. This is where I might say Bitcoin Treasury vehicle, like, do my due diligence, risk it appropriately, be like, this seems like a pretty efficient way to deploy of my billions of dollars, like, into this. I want to kind of roll the clock back and it's not like we just like popped into paper Bitcoin summer here. It's not like this just it's definitely like now the meta trend. But I think back to, like, we had I would say almost like the OG Bitcoin treasury companies, like Bitcoin miners. I remember, like, a few years ago we had, like, Marathon, now CleanSpark's got all this Bitcoin. But they didn't really, like, emerge as de facto Bitcoin, like, leveraged Bitcoin trades. Like, why do you think this is happening now? I mean, I feel like some of it's obvious. It's some of it just a time and a cyclical thing, but, like, why is 2025 paper Bitcoin summer and not 2021?
Yeah. So there's a huge difference and there's a ton of similarities. So they're both very similar and there's, like, one massive gaping difference. And so before I answer this question, so as part of my job, I've been talking with analysts from a lot of the investment banks. So I'm talking to a handful of these people every week. And so from different investment banks on Wall Street, and they want to understand Nakamoto, but they also want to work through their thesis around treasury companies. Here's how we're thinking of it. Here's the model we're using. Here's how we're valuing these things. And one of the things I always hear is, like, this is like mining stocks 2.0 from Wall Street perspective, because those were the vehicles that actually tapped capital markets, that actually, like, went out, raised money, sold equity, had ATM facilities. And so it's similar in some ways. But the main difference between a mining stock, and the reason I think this kind of play didn't happen then, is they are so kind of capital intensive, because they have this revenue machine, which is mining Bitcoin, but it's a constant arms race. They need to be diluting constantly just to tread water, let alone to gain an advantage on their competitors. And so if you just want to kind of arb the structure of financial markets to accumulate Bitcoin, what the market is telling you is that a pure financial play is more effective and accretive at doing that than a combination mining CapEx / like also buy some Bitcoin. And I think that's, like, the big difference is I think Saylor really built the playbook that, I mean, here's the real answer. MicroStrategy acquired way more Bitcoin than Marathon or Riot or Hut 8 or whoever, right? They were way, way more effective at accumulating a Bitcoin balance sheet, and they have basically no kind of CapEx liabilities that they have to keep up with. And so that was the case study. And then MetaPlanet came along, that was done by UTXO. So David and Tyler were instrumental in doing that. And you saw it again. That was the shot. That was the starting gun. Because for a while, you didn't know, could you do it again? Is it just Saylor? Can you replicate this? Will the market value more than one of these? And so that's our thesis, by the way, is that, I mean, first of all, yes. But second of all, in particular, in international capital markets, there's a ton of trapped capital that can't easily buy Bitcoin, that can't easily buy MicroStrategy. And you need that local play. And there's room for that. I expect there also will be room for several players in the US, maybe a couple players per market and so on. We'll figure out how much the market is willing to tolerate. But at the bare minimum, our thesis is at least one per capital market, which we think is conservative. But it was the success of MetaPlanet that really showed the market this isn't a one-time thing.
We've seen, empirically, it's not just a one-time thing. We have regulatory arbitrage because capital markets are siloed depending, varying various degrees. This means you guys are not the only people doing a treasury company play. You have to now either differentiate or you have to capture, you have to be top of mind. This is where us podcasters come in. But you've got to explain why I would own, A over B. And I don't know how much you can talk about this, but how do you think about this?
Yeah, no, exactly. And that is kind of top of mind for us. So I think there's probably two phases to this market. One is kind of like any new technology or any new, let me get on a soapbox for a second. People are aware that when you invent a new technology, it's natural, normal, and not adaptable, but it is useful that a bubble forms, right? Like .com, you have a bubble. Bitcoin, you've had bubbles. Railroads, you had bubbles. And the reason is that when there's a ton of potential in a new technology, the natural adaptable function of capital markets is let's put as much capital there as efficiently as possible. Let's find the boundaries. Let's find what works. Let's find what doesn't work. And if we speed run this, we get the benefits of that technology sooner. Obviously, there's no high-level market architect that's making that decision, but there's kind of a logic to how markets go about this. People know this with technologies. It's also historically true with financial structure innovations. You saw this with investment trusts, mortgage trusts, leverage buyouts. There's a number of examples in history where you actually have these financial structures that trade at a premium to the underlying asset, and they use that premium to acquire more and more of those assets. Now, some of those have they don't turn out well. They, created.
We did a whole episode last week, on the pitfalls of this historically. So, if anybody wants to listen to that, you can go listen to Colin and I riff about it. But that's what this conversation's about. We're explaining why. So,
totally.
Yeah.
And there's been those structures have generally produced bubbles that generally eventually popped. However, they also created financial infrastructure that we still use today. And so much of private equity is rooted in what came from the leveraged buyout era. REITs came from the mortgage trust era. And in investment, the tools that were invented in the 1920s are so many of the tools that we're using today, of equity sales, of preferred shares, of all these different things. So I like to think of these as a similar analogy to what happens with technology also happens with new financial structures. And so I'm a little off track from your original question. We'll revisit that. But I think what we're seeing here is we are exploring what it looks like to integrate Bitcoin into securities markets. And so the reason I started telling this story is because I think there's going to be two phases. One is that there probably will be a ton of companies that come to market. There'll be a huge number of them. And but eventually, you'll need to differentiate yourself. You'll need to have why this instead of that. Do we really need 100 of these things? Maybe we only need 5 or 20 or who knows. And so I do think we get there, and I do think that's important. And we are building Nakamoto with that in mind. But I could also see a phase of just you just see a huge volume of these come to market. But you'll need a differentiated strategy. For us, it's a combination of we are building these first movers around the world in international markets. It's a completely different strategy from MicroStrategy. And we have a ton of synergies there. We have the biggest Bitcoin media company in the world. We are, have a ton of ways to integrate that. We have a ton of ideas on generating actual Bitcoin denominated cash flows and building what I hope to be like a Bitcoin financial institution. My guess is the winners from the Treasury company era will become the Bitcoin financial institutions that actually touch Bitcoin in securities markets. And they will provide Bitcoin securities to the parts of the market that have demand for those.
Hey, Will here with Blockspace Media. Did you know that we have individual feeds for all our shows? If you're watching the Mining Pod, Bitcoin Season 2, or the Court Show, be sure to check out the individual feeds. You can find them on your podcast player of choice, whether that be Spotify, Apple, YouTube, etc. Just type in Blockspace Media and you'll find all our shows pop up, or just type in the individual show name like the Mining Pod or Bitcoin Season 2. Be sure to hit that subscribe and give us a 5-star rating so we can continue to bring you the best content in Bitcoin.
I unfortunately spent the past decade learning about Bitcoin itself and not very much about financial markets. I spent I think a lot of Bitcoiners, spent the past several years min-maxing out of traditional financial knowledge. And so I don't have a lot of the tools or even the words to really understand a lot of this. And so it's really hard for me to evaluate and compare these things. Yeah. So maybe even just a basic question is, so I see a lot of the genesis of these companies, MetaPlanet originally and kind of still a hotel real estate company. Nakamoto is merging with Kindly, which is medical tech. But you see a lot of kind of the merger, Meta. Mm-hmm. Why is that? Why do you not just spin up a new public company? I don't understand these things.
Doing an IPO has certain challenges and drawbacks, which is what you'd have to do. And a merger kind of has different timelines and different angles. So maybe let me speak not about our transaction in the US, but think about our strategy internationally. That's easier to talk about. It is a lot faster for us to partner with an existing public company that is already listed, and not just listed, but has expertise in what you need to do to be a listed company in Japan, in Hong Kong, in the UK, in Brazil. It's different everywhere. And we clearly, as just the core American Nakamoto team, don't have expertise in every single capital market in the world. Nobody does, right? So it's a very valuable, and it's not just the company we rely on. We also use other partners and experts, but it is a lot more efficient to take that pathway than to try to, especially as a US company, do new listings in 60 different countries. I mean, it would take far too long.
It makes sense. Especially as paper Bitcoin summer comes along, you have a ton of telegraphed purchases of Bitcoin coming in from all which way. And it means that if you are slower to acquire Bitcoin, you acquire it at a higher price than other people. I can kind of wrap my head around this. This is maybe another dumb question and maybe kind of obvious and intuitive to Bitcoiners who go, well, duh. But maybe for the average person, why is this happening with Bitcoin and not other assets like real estate or precious metals? Maybe it is. It's just doesn't seem to be as dominant of a trend. Maybe you're speaking to a normie here. Why Bitcoin?
Totally. This is a great question. There's probably a lot of different answers to this. I think the framework I would use to think about it is Bitcoin is the largest asset in the world, which is profoundly unrepresented in securities markets. Bitcoin is a multi-trillion-dollar asset, and the only vehicles that we have in this hundreds of trillions of dollars of securities are the ETFs, which are recent. They're in the last year. And you have MicroStrategy. People say Bitcoin's going to capture everything or it's going to influence everything. Well, securities markets are part of everything. Even in a Bitcoin world, you're not going to do away with the existence of public securities markets. And even if it ended up anyway, you're not going to get there. And even if it did for some strange reason, the path to there goes through securities markets. And so compared to its size, compared to its liquidity, compared to its performance, there is no other asset that is as ill-represented. If real estate, there's a million real estate investment trusts. Those are REITs. They literally exist. The thing you're talking about, that they're all over the place, right? It doesn't take place so much with equities because equities are themselves the thing. You don't you have ETFs, I guess. They don't trade at a premium. You do have these kind of wrappers for assets that don't natively sit on top of equities markets or in securities markets. But Bitcoin, I think, is just very underrepresented. and I think has the largest potential to play the largest role in these systems. And, my thesis part of my thesis with treasury companies is that capital markets have realized that they are underexposed to Bitcoin. They don't have enough exposure relative to how large and important Bitcoin will be. And a treasury company is an entrepreneur betting that acquiring as much as they can, as quick as possible, will be perceived as valuable by the market when it has to come to terms with this underexposure.
You mentioned Bitcoin liquidity, and this is also an interesting dimension to explore. Again, I don't know a ton about markets, but we did just see an 80,000 Bitcoin sell get just absolutely absorbed and eaten up. Maybe that was Saylor. Maybe that was somebody else, probably all the above. But we have another tens of thousands of Bitcoin telegraphed if everyone hits their, goals. We have lots of Bitcoin to be bought. Talk to me about Bitcoin liquidity. It seems like a fairly liquid market, but I don't know how to think about this. I don't know if you know how it stacks up against other types of assets. I don't know, riff on liquidity for me here.
So a couple answers here. So one, if you subtract MicroStrategy, treasury companies are barely operating yet. And people have been like, why hasn't the price risen more? Or, oh my God, what if they blow up? They're going to crash the market. I can prove to you that would not be the case in this moment in time, at least. Outside of MicroStrategy, if you take from the top 60 companies that hold Bitcoin on their balance sheet, if you take all the treasury companies out and you add up all the treasury companies in the top 60, you get something like 60,000 coins, which is less than the Galaxy seller. If MetaPlanet and DJT and all these other treasury companies sold all their coins next week, it would be less than the Galaxy impact. We're just not there yet. They are not operating at scale. And so for people that have this vision that treasury companies will get over levered and will cause this market crash, you're actually a bull on treasury companies because you're saying they're going to get 10 times larger. I mean, the price is going to go way up and then you can have your scenario. But there's no way you can have that scenario unless they acquire an order of magnitude more coins. So on one, I think it's placing where we are in this trend. And I'm actually a believer that we're actually very early. This is a very nascent trend that goes much further. And, I kind of put my money where my mouth is and, I've kind of put my career there. But I think it's early, and I think you can see that via the size. And then as far as liquidity, Bitcoin is an asset with global liquidity. It is able to field multi-billion-dollar both buys and sells relatively easily. And so that's part of, I think, what was necessary to get to the stage where if you want to run these corporate strategies and you want to kind of use public markets to acquire Bitcoin, you can't drive the price of that asset up so much. And it's one reason that Bitcoin's a better vehicle for this than other cryptocurrencies. Many reasons there. But one of them is that if you do a treasury company, as some people are doing for some of these smaller altcoins, you become the biggest buyer and the biggest kind of bag holder, and you're in trouble. You move the market yourself, and if you're not there, there's nothing. You don't want to be the biggest buyer of an illiquid thing, right? You want to participate in a deeply liquid market where your size doesn't define the whole thing.
So let's toot our own horn here and talk about why podcasters are so important. Because I understand. Okay, so you've got these levers and these techniques and strategies you can employ to efficiently acquire Bitcoin through these vehicles. But I would, that's a differentiation. That's that's a technique. But how much of this is simultaneously kind of narrative and mythos telling to ourselves? You mentioned, you've in the BTC Inc. universe, you have the large Bitcoin media company. Certainly that plays a major role. How much of this is just making sure you're top of mind for people?
I love the question. I'm gonna give my authentic podcast pitch.
Yeah.
So I think podcasts, so there's two things. We'll talk about financial markets. I'm going to talk about podcasts. I think podcasts are the ascendant dominant form of media across the board, not just in Bitcoin. The reason this is true is because we engaged in a transition. Think about media before the internet. You effectively could only create content that spoke to the median viewer because you needed a sufficient mass of people to watch it for it to be profitable, for you to do it. So you couldn't create like niche content. You couldn't you have to make, The Tonight Show. You have to make CNN. You have to make things that, 50% of the population distribution can relate to and understand. And then you need to distribute it through mass channels. So this really limited what content exists. Come the internet, you suddenly have this ability to do a podcast. What's the benefit of a podcast? It allows hyper specialization in content. You can now suddenly create content that 99% of people don't care about, but 1% of people are fucking super fans. They're obsessed with it. And the value of reaching these people is completely different. They're a completely different profile than your average TV viewer or something. And so podcasts are ascendant, and they are ascendant because they allow this specialization, and they do this into an American culture and a global culture that is it is materially fragmented into smaller and smaller niches. There's not this big global mega culture across America that everyone's like, oh yes, I am an American and this is what it means. We have fragmented, we've splintered. And so there's all these little factions and silos, and podcasts are the premier distribution channel into those splinters and into those, those factions. And so that is why the podcast is such an important medium. And then the reason distribution, media, communication matters so much is that is what has driven financial markets, I think, since the rise of Tesla stock. Since the rise of Tesla stock, and the participation of investment at a large scale, the simple truth is narratives have driven all of the best performing assets. They've driven NVIDIA, they've driven Tesla, they've driven Palantir. They've resulted in a completely changing landscape to the nature of financial markets. And you could criticize that, or you could say oh, is that good or bad? Or my point to you is it will continue. It has been, and it will continue to be. And so distribution is huge, and communication is huge. And telling a story, and I don't say that some people can hear that as oh, the story's made up. It's about making something up. It's not. The best stories are true in a sense. The best narratives are believable because they are in essence a description of reality that inspires. And
I mean, you look at the current talking points in Bitcoin today. I reference this a lot where we have codified a lot of things like Bitcoin being this hard money asset. You have all of the catchphrases Michael Saylor has coined, and most of these are emergent from Bitcoin culture. These are not necessarily things that Satoshi talked or wrote about. They are things which emerged, and a lot of them emerged from the writings and the early podcasters, which are now narratives we tell ourselves about how it performs going in the future. I think you do bring up a good point in that the best stories are the ones which are true. We will argue until the cows come home about some of the edge cases of these narratives. There's another dimension, which is the talking heads also help define and drive vibes. Yes, and vibes are a very important part of markets. Maybe you call them animal spirits. Or whatever. But I want to at least briefly touch on this concept of vibes capital, which is really fun and lighthearted, but also I feel like it's a way
serious.
To say it's serious. Yeah.
It's serious. It's a real commentary. So I am the co-founder of Vibes Capital Management, which is let's call it a movement, and it is making a stand for the role of vibes in capital markets and the role of vibes in society. And so I think to have this conversation, we need to first describe what a vibe is. And a vibe is something that you know to be true or you experience as true, and you can't really explain why that is. You walk into a room, it's tense. There's a weird vibe. How do you know? I don't know. You can retcon an explanation that's like you're picking up on the subtle signals and like blah, blah, blah. But like you're not composing that from like top-down understanding. You're just walking in, the vibes feel off, and so on. Similarly, assets have vibes. And the best investors have known this for a long time. When you get down to the real pros, the Druckenmillers, the Soroses, the PTJs, a critical part of their investment philosophy is vibes. Maybe they call it intuition, maybe they call it animal spirits, maybe they call it whatever. But it is this intangible, non-quantitative, directly known or directly intuited thing. And people struggle with these sort of concepts because they are so hard to pin down. And I can appreciate that. They're hard to model. They're hard to pin down. They're not super quantitative. They're somewhat subjective in a sense. But I think it's a mistake to ignore them, but even to downgrade their importance because of this. Like vibes are no less important just because they're not able to be plugged into a spreadsheet or able to be quantified. They drive financial markets. And I think people should be aware of this because it's relatively crucial. And, Paper Bitcoin Summer in many ways, it was a vibe. It was, the vibes were good, and humans like to participate where the vibes are good. And, one of my theses here is like, you need to be having a good time. And I know it's a funny thing to say in a sense, but it's very important. These social movements which win are the ones that are having a good time, in my opinion. It's hard to do something. It's hard to coordinate human beings if you're having a bad time. If your whole structure is, I don't like this, I don't like this, I don't like this, I don't like this, this all sucks. Sure, you'll get a certain group of people that feed on that sort of energy. But the best movements are the ones that are having a good time. And this is why Bitcoin will and has beaten gold. Gold is a hard money movement where everyone is having a bad time. The world's going to collapse. It's over. You need your gold and your canned food and your bullets, and everything's going to break. Bitcoin won because of technological advantages, but also because it is a fundamentally optimistic movement. You're having a good time. Bitcoin is exciting. It's something to believe in. It's something to devote your energy to that is positive and that you believe will make the world a better place. And this is why Bitcoin has been so successful. At least it's part of the reason, is that people join the Bitcoin community. And despite the tensions and fighting sometimes, you generally have a good time. When you go to the Bitcoin conference in Las Vegas, you're having a great time. It's not a gold conference where it's 10 panels on how everything's about to collapse, right? There's parties, you're meeting your friends, you're participating in a global revolutionary movement with all your internet friends, and it's amazing.
Yeah, that's a really good comparison. Gold, it happens to be very backwards looking, which is really valuable and important to study history. But Bitcoiners are inherently forward looking. And so
they combine the two. They combine the
two, and the future and the future is not typically written by pessimists. It's the future is defined more by optimists.
Correct.
With a couple rare cases, yeah.
And this cultivates the vibe. This defines the vibe. Like, this matters because when people encounter your movement, your asset, your company, your ideas, the first thing they take away is the vibe of that thing. And you may hate this, you may think it's irrational, but it is true.
Yes, I have rarely convinced someone to buy or own Bitcoin through argument and almost always through vibes.
Correct.
So, I want to wrap this up with a treatment on, which is almost the opposite of vibes, which is, orthodoxy. And you had a great tweet, where, you said, "It has come to my attention that a side faction of paper Bitcoin summer enjoyers have been preaching paper Bitcoin summer maximalism, which advocates owning only paper Bitcoin." Again, disclaimers, caveats about terminology. And you say orthodox paper Bitcoin positions paper Bitcoin as part of an overall portfolio. For someone who does not understand, layered commentary, what does this mean?
Yeah. So, obviously, kind of the tension in the Bitcoin community that emerged is basically this idea of, are you telling people to sell their cold storage Bitcoin and buy stocks? This is effectively the concern. And what I was saying with that tweet is absolutely not. And we've never said that. And that's not the pitch. And that's not what these companies are about. If anything, these companies are about tapping the massive reservoirs of fiat value that cannot currently buy Bitcoin. That is the biggest upside for these companies, is most money cannot easily or efficiently buy Bitcoin, especially globally. And so you're not fighting, it's not a zero-sum competition for the pie, it's expanding the pie. And you need securities vehicles like this, you need debt vehicles, you need bonds, you need all of the in international markets to expand the pie. It's positive sum. And so, some people, I think, took this all the way and it's 100% all in Treasury companies. You can do that, but I'm not in the business of telling people what to do. But I think everybody should have cold storage Bitcoin. I think there's so much virtue and utility and unique value, and the value of Bitcoin comes from its ultimate underlying reality. And we can hold two things at the same time, that it is important to cultivate the base layer of the asset, to maintain the properties and the use cases that make that so valuable. And at the same time, you also need to integrate into larger financial infrastructure, into securities markets. And so, as much as I think critics try to pin on people that are involved in treasury companies, that it's like, oh, they want your cold storage Bitcoin. No, we want, if to say anything, we are looking to integrate into pools of fiat capital that have not yet, that can't. And that's the real opportunity. And, if somebody wants to, and also most people are not 100% all in Bitcoin. This is just, it's such a tiny fragment of people that all their wealth is in Bitcoin. And so the only option is to sell Bitcoin to buy another asset. Most human beings, they have cash and money market accounts. They have low risk parts of the portfolio. They have index funds. They have all sorts of assets. You know what I mean? And, the opportunity is in, a portion of that liquidity and a portion of those assets saying, hey, I would be interested in allocating to a higher risk, higher volatility play. There's this kind of culture in Bitcoin that's it's almost like all you should do is save and you should never invest. And I get where it comes from, because our current culture in America, it's all you have to invest everything. There's no such thing as saving. You can't save dollars. So the only way you can save in kind of a conservative way is by buying equities, which is actually investing. And Bitcoiners, I think for good reason, criticize that. And one of the beauties of Bitcoin is you can just save your money in Bitcoin. You don't have a counterparty. You don't have certain risks and so on. But the opposite kind of imperative statement that every human being should do is save all of their money and never invest any money in a venture. Well, I think that's also flawed. I think that's profoundly flawed. I mean, it would create huge problems for the real economy that actually needs capital flows. But it's also just like it's not wrong to take higher risk with 10% of your portfolio or 20% or whatever it is, right? Like you can say, hey, I'm going to take higher risk for higher returns. And compared to cold storage Bitcoin, that's what treasury companies are. They are a leveraged operating business that is trying to deploy financial tools to basically generate a Bitcoin denominated return. They're trying to generate a Bitcoin denominated return. And obviously, there's certain counterparty and operating risks there that don't exist with cold storage Bitcoin. But there's also the opportunity for an additional return. And I actually think it's crucial to have somebody in the market that is trying to denominate in BTC. Because if you actually think that Bitcoin is like this dominant capital asset of the future, you need to be able to earn a Bitcoin denominated return at some point. And I'm not saying treasury companies are how that will happen forever, but it's important to get somebody in the market thinking like, how do we generate alpha on top of Bitcoin?
I know you're limited in like what you can telegraph about what Nakamoto is going to do. And again, this is being recorded on Monday, August 11th. So things can happen between now and release. If you could try to give me what should I be looking for over the next year or two? You can sidestep this question if you want. I don't know. What's the future look like for Nakamoto?
So I think there's two things to understand about what we're trying to do. One is we want to aggressively invest in first movers in international jurisdictions. There are most countries in the world do not have a treasury company, period. And even more so, do not have one that's operating at scale. There's maybe a tiny this or that. We want to create those, invest in those, and shareholders, if we're successful at doing that, benefit because we generate, if we are to do this successfully, an additional return versus just keeping the Bitcoin. So number one, our goal is to target those other jurisdictions, build new treasury companies. But the second thing to understand is that we are focused on our long-term view is that eventually these companies need to back into operating businesses or return streams. Right now, it's a monetization phase. It's a capitalization phase. And all you're doing is sort of it's a financial layer thing. But eventually, the companies that can take that pile of collateral of assets and can either deploy it in a business, right, that is using Bitcoin to do something or otherwise generating a return stream. That's the end goal. And that's what I think about when I talk about like Bitcoin financial institutions. And, if you're actually bullish on Bitcoin in the world, you need institutions that will really work with the asset itself. And so maybe treasury companies become those institutions. They're the ones that kind of like a correspondent bank, like they settle international trade in Bitcoin and convert it to the local fiat currency. Maybe there's a lending market. Maybe they issue Bitcoin backed securities into public markets. Maybe they do, settlement, whatever, or many things that we haven't thought of. And it's right now, the name of the game is acquire Bitcoin, but eventually the name of the game is productively use the Bitcoin in some capacity. And this isn't me saying like, this is what we're going to be doing in a year or whatever. This could be 10 years out. But I think Nakamoto is uniquely positioned as a team of longtime Bitcoin operators that are in the industry, that have been in the industry. And it's not just about, when there is a good opportunity that you can use this Bitcoin collateral to do something good for Bitcoin, we want to do it. We want to be doing it. Like this is very long term for us. Like, and I think like, people have all these criticisms and holdups and stuff, and like, how many of these companies would be like a short term cash grab or something. But when you look at the team here, like we've been in this industry for such a long time. We love Bitcoin. We're not going anywhere. We are not some kind of new mercenary group on Wall Street that is trying to launch one of these, right? And, I know people have different opinions about everybody, but I think that's a very credible statement. I think that's a very credible statement when we say it. And I think those are the teams you want to back, right? So we have a differentiated strategy. We're doing something that other people aren't doing. And then we have a track record of doing through UTXO. UTXO has participated in all of the most successful treasury company launches. So this is the team that has been doing it successfully. We're saying we're going to do more of the thing we've already done. And we also have a big vision that these companies have a future. It's not just a closed-end trust. It's not just this thing that just sits there as a pile of coins. This is an opportunity to capitalize Bitcoin financial institutions that last for 100 years or 1,000 years.
And one of the first things, this is one thing which is public. You did acquire a small mining advisory firm, Second Gate Advisory, and this lets me finally, before I end it, get a disclosure out, which is kind of funnily, Nakamoto has recently become a shareholder in Blockspace Media, the media company which produces Bitcoin Season 2, because Second Gate was one of our investors. So you guys with that, you brought on both Amanda Fabiano and Branden Bailey, who are literally the two, the archetypical type of operators that you describe, and that they are some of the most seasoned, I would say probably the most respected two individuals in North American Bitcoin mining. So shout out to that move. That was quite a baller move. I was very happy to see that.
Yeah. And it speaks to, people like Amanda and Branden, they don't join unless they have a view on, what's going on behind the scenes. And, part of operating a public company is you're limited in what you can say, and everyone's operating through the fog of war of what do these people really think? What do they really want to do? What can we trust them to do? And that's fine. That's just the nature of being on the outside of a public equity. But, I think the team that has come together around this, on this opportunity, I think really speaks volumes. And again, this is a team of operators. This is not a team of people just trying to, kind of take advantage of something short term. This is a team of people that have built their careers in this industry, doing real businesses, doing real things, and that all saw the very, very unique, I just speaking for myself here, cause, I made the decision to join. I think it is a really unique opportunity among treasury companies. I think, there's some very obvious ways that you can discern that and see that, just that we're doing something completely different. But I think if you really take the time to think about the strategic landscape, to think about all the work David's done, to think about everything UTXO has done, Tyler, and so on, and all the people part of that, you realize that there really are layers of synergies here and opportunities that I don't think another treasury company could easily attain.
So, Stephen, where do people go to learn more, follow along, see the who's who of the face of Nakamoto? Where do listeners go to follow along? Yeah, so Nakamoto.com, which was a huge win to get that domain. So you go to Nakamoto.com and can learn more about the company. To follow me, just Stephen Lubka on Twitter. I'm very active. My DMs are open. You can also follow Nakamoto on Twitter, follow David Bailey, Tyler Evans, Amanda. But we're online. We're going to be sharing a ton of updates with you guys. And, hopefully by the time this comes out, the merger is complete and we're getting going. All right. Thank you so much, Stephen, for coming on Bitcoin Season 2. Catch you later.
See you.